Sorry. Uh, Markup.
So welcome all. I really apologize for being late. It's just that I had a very long day. I've just arrived in the house just right now. I had quite a number of meetings, so sorry for that, but also I didn't want to cancel the class. So I had to really try to balance. So I want us to look at something new. These are what I always cover in case I have time. Mostly I don't cover them, but in case there is time, I always cover these. I want us maybe let's assume that our business is growing. I just want to straight away go to the point so that I take less than 2 hours as I had promised. So suppose our business is growing and we need to open a new outlet somewhere. Maybe our business is operating in Kigali and it is growing, and with time as it continues to grow and expand, maybe we decide that we want to relocate to a different place. We want to open a new business, another outlet. Maybe let's say one outlet in Rubavu, another one in Kayonza, another one in Huye, etc. I've chosen different regions. Now, how do you operate? How do these outlets communicate with the head office? That is what we want to look at today. So I want us to look at where a business opens an outlet in another geographical region. It is called, this outlet that you open is called a branch. So today we want to look at branch accounting. How do we prepare accounts of a branch? So if there is the head office in Kigali and there is another outlet being opened somewhere, that outlet is being called a branch. So today we want to see how do we account for the branch. Now, next week, which should be our last class online, not physical, online, our last online class next week, we'll look at, suppose we have a company in Kigali. Now, this company wants to sell its products maybe in maybe Kampala. And this company does not want to open a branch in Kampala. So in this case, this business will look for another partner in Kampala who will sell our products on our behalf. So the business will look for a partner in Kampala who will sell our products on our behalf. So what is the relationship between there? There is as we are the owners of the business, but we are looking for a partner in a different region to act as our agents. So there is a principal agent relationship. In this case, the agent is paid on commission, where the agent sells your products and then this agent is paid on commission. Now, such transactions are called consignments. So next week, we'll look at consignment accounts. So please take note. What is a consignment? Consignment is where there is the main business. It looks for a partner in a different location. And this partner is not our branch. No, it's not our branch. It's our agent who sells our products, and we reward the partner by giving them a commission on whatever they have sold. In that case, we call it consignment accounts. So you should know the difference between branch accounts and what? Consignments accounts. Please, if you have a question, type in the chat so that we really have a short time that I cannot mute and unmute. So you must know the difference between branch and consignment. In consignment, the other company acts as our agent. The other business acts as our agent. Now, the other business who acts as our agent, who sells goods on our behalf, they are called consignee. Consignee. As we are called consigner. The business which sells on our behalf is called a consignee. That is what we'll look at next week. I wanted to make it very clear because many people confuse consignment accounts with branch accounts. So branch accounts applies where a business opens another outlet, either within the country or outside the country. If you open a branch within the country, it is called a domestic branch. I've already started. If you open a branch within the country, it's called a domestic branch. If you open an outlet within the country, it's called domestic. If you open it outside the country, it's called a foreign branch. So there are two types of branches. There is what we call domestic branch, and there is what we call foreign branch. Of course, you know from the word foreign, that is an outlet outside the company, but it's our company. It's just that we are head office. Hoping that the introduction is clear. I wanted the introduction to be very clear so that you can clearly distinguish questions that ask you on consignments and questions that ask you on branch. So consignment, if somebody is just acting as our agent and is paid on a commission. Branch is when we have our own outlet. Now, there are two types of branches, as I have said. There is domestic branch and there is foreign branch. So let's come to domestic branch. Most of our questions are, of course, most of the branches that we open are within the country. So let's narrow down to this domestic. And whatever we cover in domestic also applies to foreign. The only difference is currencies are different. The only difference is that currencies are different. Maybe if it's a branch in Tanzania, they'll be using Tanzania shillings, as we'll be using Rwandese francs. If it's a branch in Uganda, they use the Ugandan shillings. If it's in Nigeria, they use their naira, etc. If it's in India, they use their rupees and name it, etc. That is the only difference between foreign and domestic. Now, when we go deep into this further, when we are looking at these branches, whether foreign or domestic, these branches are again divided into two. Sometimes we open a branch that does everything. Suppose we are in Kigali. We have opened a branch in Kayonza, maybe. Now, this branch of our business in Kayonza does everything on its own. It prepares its own financial statements. And there is another branch maybe in Musanze that does not operate on its own. Everything, they rely on the head office. It's the head office that prepares the sets of accounts. So the company in Kayonza, we will call it independent branch. The one in where I talked of Msanze. The one in Msanze, we will call it dependent branch. An outlet that prepares its own financial statements, they operate in their own. We call them independent. An outlet that relies on the head office. The head office sends goods to the branch makes the sales. Once the sales have been made, in just a second, please. Okay, sorry, I was attending to somebody who wanted to join the class. Okay, so let's continue. So what was, the problem with men, they don't multitask, so they quickly forget. What was I saying? Okay, I was talking of dependent and independent branches. So I was talking of a branch that prepares its own set of accounts. It operates independently. Now, independent branches, that is not a problem. We prepare their financial statements in the normal way, the way you can prepare normal company accounts. Independent is not a problem. Where we have a problem is in dependent, DE. Because dependent, they rely on head office in everything. Head office does everything. So we'll narrow down our focus. We are now saying, as I now prepare to go to questions, maybe 3 more minutes or 4, and then I go to questions. So types of branches. We have dependent branches and independent branches. So what have we said about dependent branches? Dependent branches are those branches that do not maintain separate books of accounts. They rely on the head office. They ultimately, their profit statements and statement of financial position are collectively managed by the head office. So they rely on the head office. What do we call them? Dependent. I want to make this concept as easy as possible because I acknowledge I'm teaching it last minute. And in case it comes, everyone should be in a position at least to attempt a question. That is my objective. So we are saying if they maintain separate books of accounts, they are called what? Dependent. Only a few pieces of information are maintained by the branches. So branches do very little. Most of the information, most of the tasks are done what? At the head office. That is what? Dependent. What about independent? Independent branches, as I have said, are those branches that maintain what? Separate books of accounts. So I've said here there is no problem because in this case, you prepare financial statements the same way you could have just prepared in the normal business accounts. Now let's look at some few journal entries, 3, and then we go. Today, I don't want to give a format. I'll be giving a format as I solve a question so that we save time. I want to solve at least 2 questions. So journal entries of branch accounts. Now, in branch, the transactions that take place, remember when a company opens a branch, in most cases, the head office will be sending inventories to the branch, will be sending stock to the branch, will be sending materials to the branch. So how do we account for inventories? Number 2, cash remitted by the branch to the head office. Once the branch has sold the products, they should be taking the cash that they get to the head office. How do we account for that? And number 3, head office, sometimes they pay expenses on behalf of the branch. How do we account for expenses that the head office pays on behalf of the branch? Head office paid expenses. So the major 3 items that will be there in any question will be how to account for inventories, how to account for cash remitted by the branch to the head office. When the branch has already sold, now they are submitting their money to the head office. How do we account for that? And also, how does head office account for the expenses that they pay on behalf of the branch? For example, in inventories, if the head office, please let's understand these short examples before we now start looking at larger examples. If the head office transferred inventories worth 1,000 to its branch office, so if the head office transfers inventories, what is the value of the inventories? 1,000 to the branch. What do? You debit the branch because the branch is receiving, and you credit inventories from the head office. So the branch is receiving inventories, you debit that, and you credit what? Inventory from the head office accounts. I know I need to further explain that. There will be an example to explain that. Number 2, cash remitted by the branch to the head office. The branch has already sold. Now, what is the double entry? Remember, in financial accounting, it's always about double entry. If the branch office remit cash, to remit is to submit the cash. Remit cash of 500. What do? You debit what? Cash, and you credit the branch account. The branch is losing money. So that is why we credit the branch account and we debit our cash in the head office. Next. So we also have head office paid expenses. So head office paid expenses. So the branch will be receiving whatever, they'll be receiving the cash, but you credit the cash of the head office and you debit the specific expense that is being paid. You know that expenses are normally what? Debited. Maybe the last point that I want to make is, so, okay, the debits and credits, the rule is this. The rule is this. When the branch is receiving, you debit branch. When the branch is issuing, giving out, you credit branch. The central operation system is the branch. So when the branch is receiving anything, you debit the branch. When the branch is giving anything to the head office, you credit the branch. I hope you've understood the rule. That is the simple rule. The operation is from the branch. We are looking at branch accounts, accounts of the branch. So when the branch is receiving anything, you debit the branch. When the branch is issuing anything, you do what? You credit the branch. However, let me also say this. You know that assets, what are the rules of double entry? Let me take you to financial accounting. Assets are normally increase in assets. Please, this is important because when I start, it will be confusing. Increase in assets are done what? Debited. Decrease in assets are credited. Also, remember those rules of financial accounting. Liabilities. You know examples of liabilities. Increase in liabilities are credited. Those rules you must also remember. And decrease in liabilities are done what? Are debited. Expenses. For expenses, what do? Expenses increase. In expenses, you debit. This is why I was telling you people to be revising financial accounting. And decrease in what? Expenses are what? Credited. Capital. Increase in capital is what? Credited. And decrease in capital is what? Debited. Please remember, these are normally called rules of thumb in double entry. Remember the rules of thumb. We'll be applying them. Increase in assets, debit. Decrease in assets, credit. Increase in liabilities, credit. Decrease in liabilities, debit. Even if somebody hears me that I'm teaching financial reporting class and I'm talking of debits and credits, he will wonder what is wrong with me. But I hope he'll be wondering, is he in the right class? Okay, but I hope you've understood the concept. Those are rules of double entry. I've just repeated them because we are going to apply them in a short while. I hope, Delta, you've understood that. So we are coming back to that. Don't worry about that. Now, when preparing branch accounts, this is the most important in exams questions. When preparing branch accounts, take note at what amount did the head office take the inventories to the branch. The head office can take their inventories to the branch at cost, or the head office can take their inventories to the branch at a profit. which means when they are taking their inventories to the branch, they even charge a profit. So they don't transfer at cost, they transfer at a profit. Please make sure that is what you look for in exams. Is it inventories transferred at cost, or is it inventories transferred at profit? The next point I want to make as I go to an example, remember also what is a markup. Again, what is markup? Markup is profit on costs. And remember, what is margin? What is margin? Margin is profit on sales, selling price. If you can remember those, that is what will help us in branch accounting. As I now start So remember, what have we said? What is markup? You must also know how to convert the markup to margin and margin to markup. Remember, that is not our main task here. That was just by the way. Okay. Okay, let's stop typing. Let's stop typing in the chat. You are forcing me to go back, and I think that somebody's asking a question. Let's stop using the chat for a while. Only use the chat when you have a question. So I hope you've understood the introduction to branch accounting. Now, I want to give two examples. The first example, please listen and listen. I want to be as slow as possible, but make sure you listen so that you get the concept. The concept is very easy if you are attentive. The first example I want to give you is when items are at cost. The head office is transferring inventories to the branch at what cost? They are not charging any profit. And the second example, when the head office is cost plus profit. The head office is not transferring at cost. They are transferring at what? They are transferring at a profit. Remember the rules we covered in consolidation. What were the rules on the consolidation? Branch and parent are members of the same company. So it is not fair for the head office to charge what? Profits. So it gives rise to what? Unrealized profits. But I'll come back to that. It gives rise to unrealized profit. Unrealized profit. Remember that. Now let's go to an example. So our first example is at cost. Our second example is at a profit. So I'm very mindful of my time. I'm remaining with 1 hour, 30 minutes, 45 minutes for each question. Now, can we follow this question and follow it well? Let's follow this question. It reads, Virunga General Stores head office is located in Kigali, sends goods to various branches at cost. The keyword there is at cost. So this example is the one of cost. Let me note it there. It is an example of, so I'm starting with an example of cost. So sends at costs. The following are particulars of Msanze branch. So Virunga, the head office is in Kigali, but the branch is in what? Msanze. So look at stock dates. Inventory on 1st April 2017. Debtors on 1st April 2017. Petty cash on 1st April 2017. Furniture on 1st April 2017. All these that you can see there, all those are opening balances, beginning of the year. Now, so there is stock, there is receivables, there is petty cash, there is furniture, there is creditors, there is bills payable, goods sent to the branch. So where am I talking of the parent? The head office sends goods to the branch at cost. Remember the rule there was at cost. So what is the value of the goods sent to the branch? 22,000. Expenses paid by the head office. So the head office has paid some expenses on behalf of the branch. And what are the expenses? The expenses are salaries, rent, and petty cash. So the head office has paid for those three. So when you add these three, it comes to 3,300. Cash sales, credit sales, cash received from debtors or receivables, sales returns from debtors, discount allowed, bad debts, of course, written off, goods returned by the branch. So the branch has returned some goods to the head office. Stock on which date? Stock on 31st March 2018. So look at all these are closing balances. All those are closing balances. So note that these ones are opening balances and these ones are closing balances. Now, the first step, before even I read the question, okay, furniture is to be written off by 10%. In other words, depreciation on furniture is 10%. The first thing to do when you see a branch account, you compare the opening balances to the closing balances. You compare the opening to the closing. So if we can see, stock opening is there. Stock closing is there. Debtors opening is there. Debtors is not there. Closing is not there. Next, petty cash opening is there. Petty cash closing is there. So we can note that this one here, maybe that one there is missing. The closing is missing. Okay, so petty cash is there. Next, furniture is opening is there. Closing is missing. So that one, the closing is missing. I'm highlighting the ones that are missing. Next, creditors opening is there. Creditors closing is there. Next, bills payable opening is there. Bills payable closing is there. That is your first step to find out what is appearing in both the opening and closing. In both the opening and closing. Now, once you have known that, you see debtors are also called receivables. Because opening debtors is there, but closing debtors is missing. So NB, opening debtors is there, but closing is missing. Therefore, the first step is to find out the closing what? Debtors. Remember, the examiner may not tell you, like here, he has not told you anything about the debtors account. So here, please take note of that NB. It's a note I've added. Opening debtors is there, but closing debtors is missing. Therefore, the first step is to find out the closing debtors by preparing. Let me take you back to financial accounting. Receivables. Receivables is also called what? Debtors control account. Please note, whenever the closing debtors is not there, your first working is to prepare what? Receivables control account before even we read the question. So let's now go back to financial accounting a bit. So in our solution, remember, I've not even shown you any format. So the first step is step one. Step one is to do what? Find the closing what? Debtors balance by preparing debtors control account. Now, most of you are good in financial accounting. So, you know, I must praise you even if you are not good. So most of you are good in financial accounting. So let's just apply the knowledge of financial accounting that we have. So I want to prepare an account known as sorry for that. Sorry for the delay. So I want to prepare an account called what? Debtors account. When do we prepare debtors account? I'm again repeating. I hope everybody has understood. When do we prepare debtors control account? When do we prepare? When the closing balance is missing. When the closing balance is missing. Debit and credit. So we have our debits and we have our credits. So we prepare that when the closing is missing. Now, in a control account, you know that in a control account, if I revise now financial accounting, this is where we record sales in. Somebody to help me. Which sales do we record in a debtors control account? Is it sales in cash or credit? Somebody to type for me. In a debtors control account, which transactions do we record? Sales in cash or sales in credit? Maybe in the chat. Thank you. Sales in credit. Sales in credit. Credit. Please take note of that. In a debtors control account, we only post sales in credit. Not cash sales are posted in the cash book. I'm repeating. Cash sales are posted in the cash book. Cash sales are posted in the cash book. Don't confuse that, please. Now, in a debtors control account, let me take you back. We have a balance what? Brought down. And we also have a balance carried what? Down. Without looking at the question. And then on the debit side, we always post credit what? Sales. Please take note of this, those who have not revised financial accounting. Credit sales. Now, this other side, we always post if there is any debts written off. How do you call it? Bad debts, because it reduces your sales. When you make sales and you want to write them off, so which means I made sales of maybe 1 million and I'll credit sales of 1 million. And I've realized customers will not, we cannot have bad debts if it is cash sales. Cash sales, you are receiving immediately. So bad debts can only be on credit sales. So bad debts reduces our credit sales. If you give discount to the customer, which discount will that be? Somebody to help me. Is it discount received or discount allowed? Which discount do you give to your customers? Discount allowed. Thank you. Discount allowed. Do we agree that the discount allowed reduces the cash sales? Now, if you made sales, we are not doing badly. I'm seeing we are really revising. So if you make sales, sometimes the customer has returned some goods. If the customer returns some goods, there will be sales what? Returns. Sales returns. If the sales returns is also called return what? Return. So that we remember return inwards. Also called return inwards. Return inwards. So sales returns are also called return inwards. Return inwards. So next, Now, when you make credit sales, and maybe after 1 month, please, the people typing on my screen, stop typing. You are making my work dirty. So next, when now the people you sold to on credit, they pay you, you post it there. Cash received, not all cash, cash received from what? Credit sales. So when you receive the cash, you post it there. But keyword there, cash received from credit sales, from debtors. Don't put cash received from cash sales. No, you post cash received. Now you get all these. You get the total. Of course, the total on the debit side. You also get the total on the credit side. Automatically, the total on the debit side will be more. So in this case, you just get this and any other item that affects the debtor's account. And then you get the balance carried down. Instead of talking a lot, let's just look for it. What is the opening debtors? What is the opening receivables? The opening receivables, you can see here. The opening receivables is 4,000. Without taking much time, 4,000. What is the credit sales? The credit sales, I'm looking for credit sales. Yes, credit sales is 25,000. I hope everyone is seeing that. Credit sales is 25,000. Next, bad debts, if there is any. Do you have any bad debts in the question? Bad debts is there, 100. Next, discount allowed. Do we have any discount allowed? Discount allowed, yes, it is there. Don't post discount received. You post discount allowed. Return inwards. Return inwards or sales returns. Do you have returns inwards? Yes, sales returns is there. Which one is there? 400. Sales returns is there. Cash received from credit sales. Please look at this. There is cash sales. Don't pick that. Cash received from debtors. That is the cash received from credit sales. It is that. And then once you have done that, you get the total on the debit side plus that. So what is the total? 29,000. The same 29,000, you bring it there. And then you now get the difference. This balance carried down will be the balancing figure. You remember how we were getting the balancing figure in other accounts? Balancing figure. So how do you get the balancing figure? It is 29 minus 100 minus 500 minus 400 minus 9,000. So this is the balancing figure. I'll put it in red. So we have got the closing balance. This is normally the first question which you are not given, but you need to calculate it. This is the first working that the examiner is looking for. Now, once you have prepared that, you next now go to Innocent. You know, everybody is hearing me. It's maybe you and you alone. So Innocent, work on your microphone, please. Okay, let's continue, please. So I'm trying to minimize my time. Okay, so now I hope everyone is okay with the debtors account. If this is a problem, just go back to financial accounting and look at control accounts and look at controls. So you are being asked to just log out and rejoin, please. So, okay, so once you have prepared that, you now come and prepare the major account. The major account is called a branch what? Account. A branch account is now the major account. And here I want us to be attentive. Please, I said, Nicholas, please, chat is only for questions. Chat is only for questions, please, so that we move. Please, let's learn to follow rules. I know T account is traditional, but this is the easiest way to explain, especially towards exams. Now we are going to open what? A branch, the accounts of the branch. What did we say about accounts of the branch? Okay, first of all, let me give you format. In format, we post the opening balances. If the opening balance is an asset, you post it on the debit side. But in branch accounting, we always call it to balance. Balance what? Brought down. If it is assets, you post them there. If they are liabilities, we call them by balance brought what? Down. So all opening balances, we will post them. So can we do it together so that we exhaust the questions together? Okay, so what I was saying, you exhaust the balances. You see, sorry. So the opening balances, you always just check the dates given. Now, opening balances, you can see the first one is an asset. Do you agree? The second one is an asset. That is how you move on. The third one is an asset. You all know that. The next one is an asset. You all know that. The next one is a liability. I hope you are okay with that. The next one is a liability. Those are the opening balances. Please, that is what you are to do. That is what you are to. Let me remove it from there, but I'd rather post it here. So I hope you've understood. So if it's an asset, it comes on the debit side. So what is the first one? There is stock. So stock is how much? Our stock is 8,000. Next, we have petty cash, which we also agree. I'm just trying to make it simple. Petty cash is also an asset. Sorry, not petty cash. The next one is debtors. Sorry, debtors. So the opening debtors is what? 4,000. Next, we have petty cash. Petty cash is how much? Petty cash is 500. Next, we have, what else do we have? Furniture. We are posting the opening balances. Balance brought down. Furniture is, so our furniture is 6,000. So we are done with the assets. So what is our total assets? Our total assets is, I just add that plus that plus that plus that. You realize that the total is what I'm posting here. So those are opening balances of assets. You come and post opening balances of liabilities. What are our liabilities? Creditors and bills payable. Creditors and bills payable. Creditors and what? Bills payables. Bills payables. So creditors and bills payable. What are our creditors? I think it was this 3,000, and bills payable was 2,000. If I'm not wrong, let me confirm. Sorry. I hope it was that 3,000. Let me reconfirm. Yes, creditors and bills payable. So what is the total balance? Total is 3,000 plus 2,000. I hope everybody is okay how we post opening balances. You look at, is it an asset or is it a liability? If it's an asset, you post it on the debit side. So let me insert these inside a bit so that you know they are opening balances. Also, let me insert these inside so that you know they are also opening balances. So I hope we are together. Opening balances, everybody is okay. I'm assuming that. Now, once you have posted opening balances, which everyone now knows how to post, next, you go and account for goods sent to the branch. Inventory sent to the branch. Anything sent to the branch, we use the word to. This means to the branch. To is on the debit side. So to, here we are using what? Goods sent to the branch. Now, sometimes you see some books writing GSTB, but don't use abbreviation in exams. Please don't use abbreviation in the exams. So goods sent to the branch. So we look for goods sent to the branch. Were they there? Yes. Goods sent to the branch, 22,000. So you come and post how much? Goods sent to the branch. The branch, remember we are in a branch account. Branch account. The branch is receiving the goods. Where is it? Where is it? Goods sent to the branch. You debit. Hey, somebody is asking me to the branch from where? Can somebody answer that? Maybe you have not been following. Goods sent to the branch from where? Head office. The examiner does not need to tell you from head office. It's you to know it is head office. It's you to know it is from the head office. So let's continue. Remember, I'm just trying to ensure that everyone understands. So now, goods sent to the branch. The branch is receiving. That is why we are debiting these goods. Now, next, we look at expenses that the head office paid on behalf of the branch. I'm repeating. Expenses that the head office paid on behalf of what? The branch. So remember, when the head office is paying, they are paying from their bank account. They are paying from their bank account. So expenses, head office paid on behalf of the branch. So to what? To bank. And here, what you do, I'm putting in bracket. This one we are accounting for expenses. I don't know where you can note down that. These are expenses that the head office. Where can I add it so that you remember? I don't want to please note it somewhere. Which expenses are these? Expenses that the head office pays on behalf of the branch. So let's look at it. Expenses paid by the head office. There is salaries. Now, expenses are debit entries. You know the rules of double entry. Remember the rules. Expenses are debits. That is why we debit. So there is salaries. Next, we have rent. Next, we have petty cash. That means the head office gave some petty cash. The head office gave some petty cash to the branch. The branch were having cash flow problems, and the head office rescued them. So those are expenses paid. So how much are they? We have 2,000. We have that. And what do we have there? 2,000 plus 1,000 plus 300. So expenses, what have we agreed? Expenses are debit entries. Which expenses are these? Head expenses, look at here, expenses paid by the head office on behalf of the branch. I hope we are together. Why do we debit? Because they are expenses. The branch is being paid salaries, rent, etc. Number two, expenses are debit entries. Now, we come to the credit side. Now, credit side, we had only posted the opening balances. Now, any income that the branch received, the branch receives income, and income is a credit entry. So here we come and write by. I think I can post it there so that I have. Okay, there is still okay. By what? Bank. Here, this other side by bank, it was for expenses. Here we are looking at what? Incomes. You don't need to write what I've written in bracket. Don't write it in exams. That one I'm just writing so that it helps you in revision. Now, what are the income that the branch receives? There is a cash what? Sales. Don't post credit sales because credit sales had been posted here. So you post cash sales. Credit sales had been posted here and we'll be getting that. Now, cash sales, and then you also post cash received from debtors. Now, the rule is cash received. These are what is received in the bank. They are income. So what is, my space is limited. So what is the cash sales? Cash sales rather. Do you see cash sales? Yes, we have 10,000. What is our cash received from debtors? Cash received from debtors is 9,000. So this is what we have received in the bank of the branch. So this money will be wired, will be remitted to the head office, will be taken to the head office. Now, take note of this. Take note of, okay, I've not got the total, sorry. I've not gotten the total plus that. So what is the total? 19,000. Now, remember, look at this, 22,000. Where was 22,000? Goods sent to the branch is 22,000. But now you can see here, sales returns. No. I'm looking for goods. I'm looking for goods. Here, goods. We have not touched on this. We have not touched on goods. Goods returned by the branch. Please look at this. Goods returned by the branch. So when the branch received the goods, we debited. I hope we are together. When the branch returns goods to the head office, what do? We credit. I'm repeating. When the branch receives goods, we debit. When the branch returns goods, we do what? We credit. So by goods, I'll call it goods returned to head office. Goods returned to head office. But they always don't use that term. Mostly they use goods returned. That is just okay. Goods returned. So what are the goods returned? Why do we credit? Because when we received, we debited. Where are they? Goods returned is that. So you can see we have accounted for everything. So now we go and account for closing balances. What if goods were returned by the customer to the branch? You debit the branch. You debit the branch. You debit the branch. Because when you sold, you credited. However, take note, you must know, were they goods sold on credit? Please, Nadaj, are they goods sold in credit or are they goods sold in cash? If it is goods sold in credit, you adjust the debtor's account. I hope we are together. If it is goods sold in credit, you adjust the debtor's account by crediting the debtor's account. If it is in cash, you take it to what? Branch account. I hope I've answered you. If it is goods that were sold in credit that are returned, you adjust in the debtor's account. I hope we are together. If it is goods sold in cash, you adjust cash account or branch account. But in most cases, we don't prepare cash account. But in case there is a cash account, you do what? Okay. So let's continue. Now, we are now going to closing balances. Sorry, buy. Balance, please. There is another example I'll do, so just be patient with me a bit. Balance carried down. Okay, so balance carried down. So you go again to this trial balance. Remember this one, I put it like this just to confuse you. Sometimes you are given this information in the form of a trial balance. But if you have not been given in the form of the trial balance, it's you to know what is the debit and what is the credit. But if it is given in form of trial balance, it's easier. Here we were not given a trial balance. So you can see we were given stock. You can see there was stock closing. There was petty cash. Is it petty cash? There was creditors. If creditors is missing, can somebody answer me? If closing creditors is missing, what do you open? Somebody to answer me. If closing creditors is missing, what do you open? You open an account called? We said if debtors is missing, you open debtors account. If creditors is missing, you open credit control account, payables control account. Thank you. That is good. You have understood. So if it is missing in exams, remember to open. Here we were lucky we were given. You know how to prepare. If you don't know, just go to financial accounting, you'll remember. You opposite, you reverse what is in the debtors account. Okay, now what else? There is the bills payable. There is the bills payables. There is the debtors. And then there is the furniture that was missing. Furniture was missing. So please, let's post this together. We are in this together. So let's start with stock. Stock is 10,000. Petty cash is 200. I hope so. Creditors is 3,000. Next is bills payable is 2,000. Debtors, do we have debtors? You had calculated it. This closing balance here. Debtors is that. If creditors is missing, you also calculate it. Now, I forgot to do a working on furniture. Look at the question. What was the opening furniture? 6,000. But you are being told furniture is to be written off by 10%. So what I'll do is this. Look at what I'm doing there. For the furniture, I'll take 6,000 minus, I hope you are following what I'm doing, 10% times what? 6,000. We are writing off that amount. So I hope you've understood what I've done there. Can somebody help me? So that is how much? That is how much? That is equals to 6,000 minus into bracket 10% times 6,000. I hope you've understood that. So what does it give you? 5,400. And then you come and give me the total. 10,000 plus 200 plus 3,000 plus 2,000 plus 19,000 plus 5,400. Please, my advice is, if branch account comes as a section B question, please, these are free marks. These are free marks. Practice, practice. You get used to it. Don't leave this question unattempted in section B. If it comes in section A, of course, that is compulsory. You have no choice. If it is in section A, you have no choice. But if it is in section B, let's all agree that this question we will do. It is very easy to earn this. Now, as I conclude on this and then I go to another example, please look at this. Now, you compare the totals on the debit side. Let us all be attentive. You compare the totals on the debit side. Maybe let me add more space there. You compare the totals on the debit side to the totals on the credit side. If you find that the total, the side that is more, if you find the side that this is what now goes to, let me just write first, to profit or loss account. To profit or loss. I'll write on both sides, to profit or loss. Please be attentive here. Now, if you find that the balance is on the credit side, it is a profit. It is a profit. The business has made a profit. If you find that the balance is on the credit side, what is it? It is a loss. I hope we are all together. So you compare the debit side versus the credit side. If you find that the debit side is more than the credit side, it means the balance is this side. It is a loss. If you find that the credit side is more than the debit side, it means the balance is this side. It becomes a profit. I hope we are together. So in this case, let us try getting the total. 18 plus 22 plus 33. How much do we get? 43. Let us also add this side. We have 5,000 plus 19,000 plus 8,000 plus 39. It is 64. Is it a profit or a loss? Please conclude for me. Is it a profit or a loss? Is it a profit or a loss? It is a loss. So I'll remove this, but I don't want to remove it. So I'll take the same because that side is more. So you will conclude it is what? No, it's not a loss, it's a profit. It is a profit, it's not a loss, it's a profit. Can we see that it's a profit? It is a profit, it's a profit. The balance is on the debit side. If the balance is on the debit side, we have said it is a profit. So it's a profit of how much? 64 minus 18 minus 22 minus 3. So it's a profit. It's a profit. Do we agree you will attempt the question? I know it is last minute, and in last minute, I don't want to overload you with information. But please, I beg you, this is a question you should never leave. You should never leave it unattempted. You should always attempt that. Now, sometimes, like in June 2016, you are also asked to prepare a cash account. Cash account. So if you've been asked to prepare a cash account, I'm running out of time. In cash account, you know, if it was a payment, you credit cash account. If it was a pay, you all know how to prepare a cash account. If it is a payment that has been made, you credit cash account. If it is a what am I saying? If it is a receipt, you debit cash account. If you have been asked to prepare cash account, innocent. Why is closing asset on the credit? Innocent. All assets closing. Sorry. I made a big mistake. Sorry. And you people, you could not correct me. Thank you, Innocent. That is not what you have asked, but what you have asked has enabled me to make correction. Please, I'm very sorry for that. I've made a mistake. Thanks, Innocent. You have made me to identify. I said assets opening are on the debit side. You know, this is sometimes the disadvantage of just taking a question without looking at it. So assets, please, let's be together. Assets opening are on the debit side. Liabilities opening are on the credit side. Somebody should have corrected me here, please. Assets closing are what? Assets closing are on where? On the credit side. If opening is on the debit side, closing will be on the credit. Liabilities closing. Somebody should have corrected me there. Liabilities closing, where will they be? Balance brought down. Somebody should have just corrected me here. Creditors, thank you. That is not what you asked, but it has enabled me to correct something. Creditors, bills payable. I think I was rushing to go to another question. Thanks for that. Now, it's closing. That could have been a very big mistake in exams. Closing is that. Please, whenever you are not sure of, so I'll remove this. The liabilities, those ones are liabilities. I'll remove them. I hope you've understood. I hope you've understood what I've done. I hope it is clear. Let us continue. So has this changed? I did not check the figure. Has it changed? L41 minus L24. This is L24 minus L22 minus L31. Yeah, it is now clear. I hope we are together in that. I'm now just confirming the figures so that before I go, I confirm that it is correct. These 200 have accounted for it, 10,000 have accounted for it. I'm just looking at the trial balance, not the trial balance, the major account. So 19,000 have accounted for it, 800 have accounted for it, 3,000. Yeah, I've accounted for everything. Oh, okay, thank you. I've not accounted for this. 3,000, thank you, plus that. Yes, I've understood you. So what will I do? I minus that. Thank you. Is it clear? Please don't leave this question unattended to. The same I'll repeat next week when I'm doing consignment. Now, this was an easy example. I must recognize that. Now I'm remaining with 45 minutes. Remember, I said that we will end the class today at 8:30. I hope I communicated in the group. I'm remaining with 45 minutes. Please, let's be attentive in the next 45 minutes. Now, in the next 45 minutes, the question that we have just done, what is the question, the difference between this question and the next question we are doing? You must be in a position to understand the difference in the two questions. This question, the parent was sending goods to the branch at cost. Now, the next question, the parent is I don't know why I talk of the parent. I think I've done a lot of consolidation. I mean the head office. The head office was sending goods to the branch at cost. But now we are seeing where the head office sends goods, but on credit. Where the head office sends goods, but sorry, not on profit. So let me just copy paste this so that I save time. I'm just copying pasting this so that I save time. in the next example, please, if you have any question, reserve it for this. I'm not checking your questions, please. If you have a question, reserve it for this example so that at least we complete this example. This is normally common in exams because the examiner just wants to complicate your work. The examiner is interested in just confusing you. So he likes bringing such things. Of course, these items will change. Let me just remove them, but of course they will change. I'm just trying to save time. That is why I'm doing that. Okay, I think so that we learn together. Let me just remove them so that we all learn when doing it instead of copying and pasting. So that we all learn, let me just remove. So that we learn when posting them, when posting the entries, we post these. Now, in such a question, Denise, I'll answer your question in this example. Remind me in case I forget. So what about if the closing debtors was given? If it was given, don't open a debtors account, Bambazi. Denise, I'll answer your question as I do example 2. So Bambazi, if the closing debtors is given, you don't prepare the debtors account. You don't prepare the debtors account, you just post it. So if it was given, you just post it. You don't prepare the debtors account. So can we read this question? We understand it together. I hope we are all together. Let's read this question together. Beka or BK Limited head office invoice goods to its Huye branch at cost plus 25%. At cost plus 25%. So I'll write here the first step is to convert the markup to margin. Convert the markup to margin. Somebody to help me. Why do we convert? No, then this is not in your notes. It's not in your notes. They are additional. I'll share with you. They are not in your notes. So the first step is to convert the markup to margin. Now, can somebody help me? When do we convert markup to margin? When you have been given the selling price. When you have been given the selling price, you'll have to, when given the price at which, so you'll need, the first step is to convert the markup to margin. Now, what was our markup? Remember, markup was how much? Look at this. Markup was 25%. Markup was 25%. Was it 25? Yes, 25 over 100. I hope we are together. What will be the margin? Margin, I hope you know how to convert. Margin, somebody to help me. Margin will be equals to 25 divided by 100 plus what? 25. That will be the margin. So the markup was 25%. It was 25 over 100 was 25%. So margin, what will be the margin? Margin will be 25 divided by 100 plus 25. What do you do whenever you are converting? Whenever you are converting, so margin is, when converting markup to the margin, you add the numerator to the denominator. You add the numerator to the denominator. So the margin will be that. that is always, let me give another example. If the markup is 30%, that is the same as 30 over 100. What will be the margin? Margin will be 30 over 100 plus 30, etc., like that. So that is how to convert the markup to margin. What is markup? Remember, markup is, again, this is financial accounting, is profit on costs. What is margin? Margin is profit on what? Sales, selling price. Now, that is your first point. Your first point is to convert the markup to margin. So let's be very attentive here, very attentive. So stock opening, debtors opening. So the opening are very few. So let me put opening in red. Okay. Now, you have been told what was their rule? Cost plus 25%, which means 25% is the profit, which means, please understand me, this 8,000 is inclusive of profit of 25%. However, because 8,000 is sales, is the price at which the branch bought the goods from the head office, this is now the equivalent of stock value from the receiver. So that is why we convert the markup to margin. Now, opening balances, can we just I don't know if this, okay, let me just let's post here. I think it's okay to post. So we will start with to balance. Everyone now should be following with me. Balance brought what? Down. I think we can just post them to save time. Stock. And there is debtors. There is debtors. So what is our stock? 8,000. What is our debtors? 5,200. What is our total? 8,000 plus 5,200. I hope we are together there. Those are the opening balances. Please understand me. This is the new rule we are doing. Now, remember, the parent sold to the sorry, I'm very sorry. I'm used to the parent. The head office sold or transferred inventories to the branch at a profit. So you must remove the profit from the stock. Remember, this is cost plus profit. Cost plus profit. But we are not allowed to make a profit on sales of stock. So what do? You must reverse that. So you will call it by stock reversal. In other words, we are removing what? Profit. I hope my space will be enough. Okay, I'll put it somewhere else. Let me not put it there. So we are removing profit on stock. What is our margin ratio? 20% times 8,000. We are removing the profit that these people made illegally, that the head office made on the stock. So the stock was here. So we reverse that. We remove the profit so that we only remain. How do we remove the profit from this? By crediting it. I hope you've understood that. Whenever there is a profit, it's a bit complicated, but I'm trying to simplify it. Times what? 8,000. Let me click this 8,000 so you know that it's that 8,000. So it gives you what? 1,600. So why do we do this? Not given. Why do we do this? I can put it as a note here. What do we say? You remove the profit made by head office in transferring stock to what? To the branch. So you remove, that is what we mean by that. So I hope you will remember that note. So you remove the profit. So we are done with that. So we come back. So we are finished with that. Debtors are people we owe. So that one we don't need to remove profit. We only remove the profit on, what? On stock. Remove the profit on any goods. Remove the profit that was made on the sale. Why did it turn its margin, yet profit was on cost? This one I need to teach markup and margin. Now, Mambazi, the best I can say for now is the branch received the goods at 8,000. This price at which the branch received the goods at 8,000 is inclusive of a profit of 25% on cost. But this is the price at which the branch received. So it is the equivalent of the selling price. So because this is the price at which the branch received, this is the sales, the price at which the branch received the stock. So this is not cost. This is what? Selling price of the stock. That is the much I can say. So you've got it. Thank you for... Yes, Isaac, don't call it unrealized profit. Just call it reversal. Don't call it unrealized profit. Just call it stock reversal. There is another word that they use but have forgotten. There is another word that they always use but have forgotten. Just call it stock reversal. Can we move on, please? Now, we have looked at that. Next, goods sent to where? The branch. Invoice price is like the selling price. So goods sent to the branch. Okay. Goods sent to the branch. Goods sent to the branch. Remember we said here, 2. What did we say? Goods what? Goods sent to the branch. So do we agree these are stock? We need to first of all agree. Goods sent to the branch. They were sent at what price? 40,000. So do we agree they are goods? The head office made a profit. Do you agree with me? Do you agree the head office made a profit on goods? Same as stock. Thank you. So what do? You come here, you say buy goods sent to the branch, goods sent to branch, what? Reversal. Reversal. Thank you for understanding very fast. We are good students. Or is it because exams is near? So here is, again, we get 20% times 40,000. You know, if exams were not here near, I could get really 1,001 questions here. Okay, so what will it be? 20% times 40,000. Again, what have we said? It is remove. I'll copy that. I'll paste it. Remove profit made by head office in transferring goods to the branch. In transferring what? Goods to the branch. Thank you. But avoid using abbreviation. Avoid using what? Abbreviation. In exams, don't use abbreviation. That is why I'm writing it in full. Now, let us continue. We are not doing badly. We are very good students doing well. So we are finished with this. We are finished with that. We are finished with that. Return to head office. Return to head office. Return to head office. How much? Return to head office is how much? First of all, return to head office. Is it debit or credit side? That is what I'm asking. Return to head office. Thank you. Thank you. Return to head office. So we'll call it by, can I use abbreviation? I think goods sent, but you don't use abbreviation. Goods sent to branch, but return. It is what? Return to head office. Please don't use abbreviation in your case. Don't use abbreviation. So goods that were sent to the branch, but the branch returned them to the head office. They were worth how much? These goods were worth how much? 800. Now, this is why I'm saying branch accounts is always easy. These goods, when the branch received them, they received them at a profit that the head office made. So there was a profit of, again, 20% there. In this profit of 20%, you reverse. So what do you reverse? To what? How will I call it? Goods sent to head office. Sorry, goods sent to branch returns. Returns, but we do what? Reversal. We reverse. So what do we reverse? 20% times 800. 20% times 800. So you take 20% times 800. Remember, it was posted on the credit side. So when we are reversing, it is on the debit side. I think we are doing well. Let us continue. So next, we continue. We are done with that. Rent and rates. Rent and rates, salaries, sundry expenses. What are those? Somebody to help me. What are these? What are those? Somebody to type for me in the chat if you understand. What are those? Now you understand the logic. What are those three items? Expenses. Thank you. Expenses that the, how did you call that? Expenses that, not the parent, I'm used to calling it parent, that the head office, this one here, expenses to bank expenses. That is what I'm looking for. So to bank expenses. Now, what are our two bank expenses? Rent and rates, salaries and wages, and sundry expenses. Rent and wages, salaries, and what is it? Salaries and wages. So the other one was rent and rates. Sorry, this is salaries and wages. This one was rent and rates. Sorry for that. This was rent and rates. And the other one is sundry expenses. Sundry expenses. Sundry expenses. So what is our rent? 600, 1200, and 300. Now, rents are not goods. Rents are not goods, so there is no profit reversal. I'm repeating, rents are not goods, so there is no profit that was made. These rent are expenses. Profit is only made on goods. I hope we are together. Profit is only made on goods. So rents are not goods. Rent are not goods. Okay, thank you. Rents are not goods. Now, let's go to cash sales and cash received. So here, by bank. Is it by bank? I hope you remember, was it by bank? Income. And I said what I write in brackets. So by bank income, we look for if there was any cash what? Sales. And if there was cash received from debtors. Let me push them inside a bit. Okay, so in this cash sales, were we given? Let's look for it. Cash sales, yes. Yes, 18, not 30. 18. Cash received from debtors. 28. Okay, that is good. 28. Now, you get this plus that. In class, call after 1 hour. In class. Okay, let's okay, so here was cash received from debtors is that. Now let's go for closing balances. Remember, opening balances, there was reversal. Same concept to closing balances. Tuyalo, which goods are you saying you returned at 600? Where are you getting your 600? Tuyalo, please don't confuse other people. There is no 600 anywhere. So if it's such a question, you ask it. There is a private chat, so you can ask it that way. I was just confirming that what you are saying is right or wrong. It's not right. What you are saying is not right. So, you know, it's last minute. It's not good to put other people in panic mode. So here, okay, by bank, so cash sales and cash received from debtors. Where are you getting the 5% from? Now, Tuyalo, please don't make such a mistake in exams. Don't make such a mistake in exams. The goods returned was 800, but we have reversed it. We have removed the profit on it. That is why we have debited this. Don't make that mistake, please. The goods was 800, but we have reversed it 20%. You use the margin. You don't use 25%. You use the margin. Margin is 20%, not 25%. So it is 160. It is that 160. Please don't make that mistake. 25% was? Okay, let's continue. So by bank, cash sales, okay, credit sales. So what else? I was getting that. Let's continue. And again, I said, don't pick what? Don't pick what? Because it is what? Don't pick what? Credit sales here. Don't pick credit sales here. Because bank does not receive cash in credit. Does not, when we make sales, we are not receiving the cash immediately. We are debiting what was received in the bank. What was from credit will not be received. It will be a liability. It will be an asset at the end of the year. Okay, can we continue, please? So let's go to the closing balances. So what do we call it? By balance carried down. By balance carried down. By balance carried down. Now, by balance carried down, in this case, we will look for the items. There was stock opening, but now we look for stock closing. Debtors, oh, debtors. Did we have closing? Okay, first of all, let's look for stock. Did we have stock closing? Stock closing? Yes. Stock closing is there. Debtors was missing. But stock closing, it's again at a profit. So what do? Stock closing. What do? We reverse. Closing stock is on the credit side. We reverse. How do we reverse? I'll call it to stock reversal. So how much? 20% times what? 6,000. So this will be 20% times what? 6,000. Now what is remaining is debtors. And debtors, you all know that if debtors closing is missing, you can use horizontal, but T account can help you. Victoria, why removing profit from return goods, yet we had removed profit from goods sent to the branch? Remember, remember, Victoria, in accounting, we are not allowed to set off. Set off is to write off. That is why we posted 800 here, but we posted the reversal there. So when there are any goods here, we posted 8,000. We did not post the net. Had we posted the net there, that is when we could have left out the profit in the goods returned. I'm repeating. Victoria, you only do that if this was costs. If that was costs. If it was cost, you do what you are saying. But so long as this is not cost, you must reverse with profit. You must reverse with profit. I hope we are together. You must reverse with profits. So I'm on debtors account. Now debtors account, we are all now familiar. What do we start with? Balance what? Brought down. So what is balance brought down? Debtors, remember? Debtors balance brought down. Is it there first of all? Yes, it is there. Next, what else did we say? Credit, was it credit sales? I hope the financial accounting is knocking in. Credit sales, do you have credit sales in the question? Let's look for credit sales, credit sales, credit sales. Yeah, it is there. Credit sales is there. If there was any refund, refund is posted that side, refund. But in these questions, there are no refund. So next, by discount, discount allowed. What else did we say? Discount allowed. Do we have it first of all? Let's confirm. Discount allowed, discount allowed. Do we see it? Yes, it's there. 300 is there. Next, is there any bad debts? Bad debts. Let's look for bad debts. Bad debts, bad debts. It is 500. Bad debts is there. I can go and pick it. Bad debts is 500. Next, we have, is there any sales returns? Sales returns is there. Sales returns. It's called returns. Inwards. Sales returns. Sorry. Sales returns. Our sales returns was sales returns. 700. Okay. Cash received from credit sales from debtors. Yes, it's there. Cash received. Cash received is there. Cash received from credit sales from debtors. Cash received from credit sales is how much? Cash received from credit sales. It is not there? Yeah, it is there. Cash received from credit sales. Now let me scheme. Is there an item I've left out now? I think I've used all items. I've used everything. Yeah, that is good. I've used everything. So now you close the account. You close opening plus 30 is 35. 35. So we'll get balance carried down. It's a balancing what? Figure. Balancing figure. That is 35 minus 300 minus 500 minus 700 minus 28. 5,200. So the closing balance here is it is 5,200. This one I can remove it from there and post it there. So stock closing was 6,000. Closing was 6,000. Sorry, I was talking to myself. Oh, okay. I understand why it has changed. I was wondering why that has changed. It is this. Okay, so I think that's it. Now, after that, what have we said? After that, you check whether there is a profit or a loss. You get the totals. 13 plus 40 plus 160 plus 2 plus that. It gives you 56. This other side is equals to 16 plus 8 plus 8 plus 47 plus 6 plus 5,000. How much is it? 68. So 68 is more. So I'll transfer 68. So is it a profit or a loss? Please, contribution. Contribution, profit or loss? Profit or loss? This side was more, so it is a profit. So we can conclude it's a profit, which is a balancing what? Balancing figure. Now, 68 minus that minus 160 minus 1. I hope I've picked everything. Did I pick that? Have I captured everything? L41, L21, L41, L21, L23, L25, L30, and okay, I left out one. Minus L32. Okay, I left out that. Please, now that I've covered this, you know, you people, you have been, now, just because of exams, I want to leave it at that. But let me say this also. You know, sometimes I see the messages you post on chat. Now this one, now I'm lecturing you people. Sometimes I look at messages you post on chat. Some think I don't understand Kenya Rwanda. There are some people blaming me a lot. He has not covered this. He has not covered this. You can imagine the number of extra. I wanted to talk to you people. I wanted to talk to you after I've finished. You can imagine the number of hours I've given you just to cover what is important. At least you should look at the positives. I was aware I've not covered consignment accounts. I was aware I've not covered branch accounts. I will not cover insurance. Please take note of that. I will not cover insurance. Now I'm a bit firm now. Reason being, it is rarely tested, but it was tested last sitting. There is almost a probability of 99.999% that it will not be tested. But if you feel it will be tested, revise it on your own. That is the point I can make. FR is very wide, and I'm cognizant of the fact that FR is very wide. And you can imagine every class, both Msanze and Kigali, I've been teaching you Saturdays, 2 classes, Kigali, Sunday, 1 class. Remember that 1 class was a makeup class. And every Wednesday that we have been meeting, I was doing only these so that we try to cover the syllabus. I've really done my best, and that is why even for Kigali campus weekend, what did we do? Did I teach you branch accounts weekends? No, I wanted to revise on weekends. Same to Msanze this weekend. I'll not teach anything new. I'll be revising. If there is anything new, I'll teach next week on Wednesday. But the things I cover last minute, I'm not saying they will not be tested. In case they have been tested, I feel they are simple. They are things I can cover. I hope we are together. Otherwise, you have been a very good class and I've enjoyed your time. And I hope we will not meet next semester. So let's all agree we are not meeting next semester. We are all going to pass. So next week on Wednesday, I will cover consignment accounts. Are we together? Please, I'll also try to make it as easy as possible. I'll try to make it to explain it in a simple way that everyone will understand. Otherwise, I'm very grateful for your attendance. That is the much I wanted you at least to have an understanding of branch accounts, so that in case it comes, I'm not saying it will come, in case it comes, you are all okay with branch accounts. So next week, I'll also cover consignments. So just in case it comes. Otherwise, in Kigali, as we had agreed, I'll also try to have one other physical class. We'll have a makeup Msanze, we will discuss. So these small questions that you have, you can ask them in that class. Otherwise, let's stop there. I don't want to go beyond that. Have you understood generally? Have you understood what branch accounting is? At least you should be in a position to answer 90% of a question. Have you understood branch accounts? Thank you so much. I'm grateful for your attendance. So any other thing, you can now Google the rest. If there is something you don't understand, you know YouTube is a very good teacher. Even myself, what I don't understand, I just go to YouTube and I learn myself. So the rest you can now Google. Otherwise, see you. Msanze, please, Msanze. I have some classes in Kigali on Saturday, not financial reporting. I have a management accounting class and another class. So Dio, I think, has communicated to you that I'll travel Sunday morning at 8, I'll be in Msanze. Sunday morning at 8, I'll be in Msanze. So let's all meet in Msanze at 8. Exactly 8 Sunday morning and afternoon, I'll be in Msanze. So let's stop there. We forgot something? So let's just stop there. In case you have any other question, we can create a channel so that we talk. Let's just stop the class there. I hope I've not left out. I'm seeing some questions, but I don't want to read them. Closing liabilities. I've not posted closing liabilities. Which one? There were no opening liabilities. So if there were no opening liabilities, of course, there are no closing liabilities. So you only post them if they're there. If they are opening liabilities, you post on the credit side. If they are closing liabilities, you post them on the debit side. They were not there in this question. Good night, all of you. See you next class. Msanze, let's meet on Sunday.